Welcome back. You're with us here on the Global Reset. Today, we are speaking with David Steinbach, Global CIO of Hines. Hines is one of the world's most influential real estate investment managers. And the reason that I sort of want to talk to David today is simple, to understand basically where we are in this global real estate cycle. And of course, with a focus on India and Hines's plans in India as well. Now, before we go across to David, who's right with me here in the studios, let me introduce Hines as a firm for those of you who may be unfamiliar with them. So just a short preamble here. Hines is among the largest real estate investment managers globally. It's founded in Houston back in 1957 with more than $90 billion in assets across sectors. Their portfolio spans everything from landmark office towers and logistics hubs to residential and retail projects as well. What makes Hines different, though, from many of its peers is its vertically integrated model. It's not just about allocating capital. Hines actually develops projects, operates them, manages tenants, and crucially co-invests in its own money alongside clients. Now, today, Hines operates in over 30 countries and 300 cities worldwide, competing with the likes of Blackstone, Brookfield, etc. But the differentiator is boots on the ground. Over 4,000 employees providing local execution and tenant management as well. Now, Hines entered here India, the Indian market, in 2006. They got offices in Gurugram, Mumbai, Bengaluru as well. And over the years, it has built or managed nearly 15 million square feet of projects in India. Some of Hines' best-known projects here include One Horizon Center in Gurugram, with DLF, Skyview Corporate Park with Shapoorji Pallonji. The emphasis is on Grade A offices catering to global corporates in India's thriving global captive ecosystem. Global capability centers. It's a topic we discussed here, right here in this episode yesterday. Hines has largely followed a development-led model. They partner with leading developers to create premium office assets catering to multinational tenants and then channel some of these into REITs as well, institutional investor markets. So, as I said, there's a short introduction for those who are unfamiliar or don't know very much about Hines. But let me get David into the conversation now to do the rest of the talking. David, great to have you with us here.
Yeah, thank you.
Appreciate it. David, First things first, where does India figure in Hines' sort of global view, and how important is India as a market?
Yeah, like you were saying, India, we've been here for almost 20 years. And when we first entered the market, we saw how India was going to have a significant place in the global economy, even back then. Those now look like early days in many ways to how India's evolved the last 20 years. And so when you think about a global portfolio and think about global supply chains and global flow of capital, having a presence here has been a very important strategic part of our overall business.
In terms of AUM here in India, is there a number?
Yeah, we've got, as you said, we have about 15 million square feet under development, which for us is pretty significant. This is, like I said, a very important market. This has primarily been a development market for us. Our business globally, we do both acquisitions and development, and the cycle changes. It depends on how the market's pricing for what you want to do. But in India, it's been a significant development opportunity. There's been a lot that has needed to be built.
And concentrated in these 3 or 4 cities that I mentioned?
We've been very focused on what the primary cities that we see as primary drivers of growth for us, and also what investors are looking for. We like the fundamentals.
So Bengaluru, there's Gurgaon,
and here in Mumbai.
Mumbai as well.
Yep.
Hyderabad. GCCs.
Yeah, we've been most focused. We do have some other things in other cities, but our biggest presence and focus has been the big 3.
In the big 3. And when you say most of it has been development, you mean at what stage do you get in here in India? Do you get in when the land parcel is identified along with the builder? Or?
Yeah. So our approach is going to be very dependent on the deal and what we're looking for in the moment. So it's hard to say this is the only way that will work. We are looking for great partners here locally. We're looking for great opportunities, and so we're very creative to be able to structure those deals and make sense of them.
Mostly it's been development, you mean, in India?
And here in India, yeah, development.
Which is you get in early.
You get in early, and there is a certain risk premium that investors expect. Here in India, in office, for example, it's about a 450 basis point spread that you want for to compensate you for that risk in development. Okay. In logistics, it's about 200 basis points, and that is wider than most other markets that we're in.
So this globally is on top of the returns.
Well, this is part of the return composition, okay. Right? So you expect a spread to compensate you for that risk to get in early. But yeah, getting early investors get paid for that, and you're getting paid for taking that risk. And investors are looking for high quality real estate they want to own. They want the cash flow and value appreciation over time.
And how have returns been? I mean, you've seen one cycle, 1.5 cycle. I mean, I don't know how you define it, how long, but I mean, how have returns been really?
Yeah, well, look, I mean, the last few years, I'd say globally for real estate, it's been a tough market. We felt that in the United States, we felt that in Europe, and more broadly in Asia. Here in India, though, I would say the last few years have been different. I mean, the market, interest rates have been moving in a different way than several of the Western markets. That's been a great tailwind. Also, investor interest has been picking up the last few years. That's been another great tailwind.
So returns, what kind of returns? I mean,
yeah, I mean, we are looking for, it's going to again depend on the city, depend on the project, but for development risk, we're looking, in the very high teens, 20% range of returns. But again, it's more about the spread from the build to versus buy to.
And typically, how long? I mean, the structure is individual projects, or you invest through a fund? I mean, you have a
Right. So we have a lot of ways that we work, both with funds and direct. Here in India, we've been mostly focused on direct investing, and so we're working with an investor one-on-one on a specific deal. Some of it has to do with the nature of what we're doing here, has required that. And we'll negotiate with our investors, bring them into deals, work with our partners. We have a very large team here that's obviously sourcing acquisition or development opportunities, and yeah.
I mean, so as compared to some of the other markets that you mentioned, I believe India's done better. I mean, in terms of returns for you.
Yeah, the last few years, India has done. I mean, like I said, for example, in the United States, interest rates have gone up. We had a 500 basis point swing in interest rates the last few years, and that's obviously come down some. But just within my career, that 500 basis point swing was one of the largest swings we've ever seen. And so, as everyone knows, the cost of financing is an important piece of return composition for any kind of real estate investment. So that was going to take a significant bite out of returns, and it has the last few years. I'd say the U.S. and Europe have repriced significantly in light of that. But again, it feels very different here in India. The cycle has been very different. And when you back up here in India, there was really, go back to when we entered India in the early 2000s. That was really because the market opened up to foreign investment. And so we were one of several companies, foreign companies that came in. Back then, it was mostly U.S. and European capital, I'll say. And in that first wave, there were some investments that worked out, some investments that didn't. That wave subsided, and then the government here in India did a lot of reforms to try to bring more capital in. And I'd say capital then shifted more to the Middle East. And today it's shifted a lot to Asia now, and Asian capital is...
In terms of where capital is coming from.
Where capital is coming from, correct. Okay. And that's been a very interesting shift to see, kind of from U.S., Europe to Middle East, now to Asia, has been an interesting shift. And so now we are very focused on Asian capital, looking for opportunities here in India.
I mean, cities like commercial office space, et cetera, goes, I mean, at least here in Mumbai is
yeah, there's so much that needs to be built.
Yeah.
There's so much that needs to be built. I think what investors are also seeing is a real shift in happening in global policy, right? We're seeing it with tariffs. We're seeing supply chains getting reworked. And that is, I think India is going to uniquely win in that environment, actually, because as these supply chains do get reworked, there's a real opportunity to grab new market share. I think a lot of companies globally are relooking at where they want to put people. As your own program has pointed out, there's a significant opportunity here in India with these global centers of excellence of really bringing in talent. And I think the rest of the world has been really impressed with that evolution, and so it sees a real opportunity in that.
So we did a program yesterday, and we had EY and another consultant on. So there were 2 GCs opening every week.
Wow.
2 a week.
Wow.
I mean, they're not large ones, they're large ones in terms of financial services with tens of thousands of employees. I mean, they're already here, but and interesting work. I mean, a lot of R&D is happening here. We kind of think of this as the back office and operations, etc. But a lot of actual R&D stuff is happening out of here, even for companies like NVIDIA, etc.
Right.
So that's a big trend. In terms of your operations, David, it's largely office space, or are you looking at sort of other areas as well?
Yeah, we want to be agnostic to product type. We want to think about the highest and best use for any site that we're looking at. And oftentimes, it's going to be a blend of uses that really maximize value. And so we want to be able to think holistically about a solution and really be able to maximize investor returns for wherever we're working. So that's philosophically how we think about development. Here in India, though, the last few years, we've been mostly focused on the resi as well as office. Those have been some significant waves. I do think logistics is going to continue to be a good story here. E-commerce penetration is only increasing, and we'll see continued evolution in that space as well. So those have been kind of our major sectors here in India where we've seen
data centers, et cetera, or you think?
Yeah, I mean, we have, and we've been chasing data centers really around the world. It is an interesting business to see it evolve. I think it'll continue to be an important piece of real estate allocations. It is a bit nuanced, though, right? I mean, it's about what the hyperscalers want, where they want it. Power is really the scarce resource in that, availability to power. So here in India, we haven't so much been focused on that per se, as we've seen a lot of opportunities in the sectors that we're in.
So you said you started with residential, right? You would say out of the 15 million square feet, which we spoke about, or maybe the new development which is coming out, how much is residential?
Well,
right
most of it is in the office sector.
Office sector.
Yeah. And that's your point earlier on the GCCs. I mean, it is some of our, I mean, the world has been concerned about office the last few years. Certainly in our portfolio, globally, office has taken some real hits, and investor sentiment has been very negative. I will say here in India, though, it's a very different story in terms of demand. I mean, some of the largest office leases we've signed in the world have been here in India, and they've been to very high quality, high credit tenants, and they're looking for significant space for the things you mentioned, 2 a week. That doesn't surprise me at all. And I think those tailwinds are what's causing that.
I got that. In terms of, just to pull back a little bit, out of, say, $100 that Hines puts to work every year, how much comes to India?
Yeah, I mean, it's hard to say in any given year. I think, again, we have a very large global business, almost 100 billion under management. Probably, I'd say, 40% of our business is in the United States. 60% say is the rest of the world. The last year, we've had a significant allocation to Europe, to Asia broadly. India is getting a growing share. I think that's more the story is the growing share it's getting every year.
REITs is the sort of, we've got 3 listed REITs. They're listed in stock exchange. I think one more is coming. Do you think it's going to pick up? I mean, US, for example, both listed REITs and private REITs are huge. I mean, it's a fraction here at this point in time. You think we'll follow the same trajectory?
I think the development in the REIT space here in India is a very significant one. I think your viewers should really take note of what's happening. When you're a global capital and you're looking to deploy capital into projects, your ultimate liquidity and exit is an important piece of the equation. And making any kind of real estate investment is capital intensive, as we all know. And so finding those liquidity moments are very important. When you think about the evolution of markets, and especially in a lot of the historic emerging markets that we've been in, that liquidity has been, people have been concerned about it, and there's been a premium put on markets because of those constraints. I think because of a lot of reforms that have happened here in India, but also a lot of things that are occurring, as you mentioned, have been some REITs emerging here. These are very important moments. Now, I don't think that means that the REITs will necessarily dominate the exits, but it just gives more shots on goal, if you will, for exits. And so it gives more liquidity windows. It gives investors also more transparency in how the market works.
Monetizing existing assets and moving on to the next thing.
Exactly. And so, right.
But any policy enablers needed, or you think, it's there, it's going to happen organically?
Well, it's a little bit of both. I think you absolutely need policy to be supporting it. You need government to be supporting it. And the government needs to make the ease of business only improve, right? And needs a framework in which the REITs can exist and be able to trade. Certain expectations are on the global stage for that. And I think India has done a good job in making progress there. Continued efforts need to be made there. But I think that is just an important development.
Just one 30,000 feet question, AI, right? Is it if these AI agents, as someone says, one agent is equal to, 5 work, it depends on who you ask, right? But it's going to take away people. I mean, what does that do to office space? It's not a new question. It's been around for a while. but it's picking up. I mean, the pace of AI adoption is exploding. You think it's a relevant question to ask, wonder about, or no?
Absolutely, and I do think AI is going to change everything, right? It's going to impact a lot of what we do. The way I think about it, though, is you think about the global economy the last 100 years, and particularly in places like the United States post World War II, when women started entering the workforce. Back then, there were concerns. What's this going to do? What's it going to do with jobs? And what happened is the economy only grew, and the economy only grew and expanded. And I think that very similar thing is going to happen with AI. A new entrant is coming into the workforce. It's going to need a home, which is data centers in a lot of ways. But it's going to enable productivity gains. It's going to enable a lot of things that we just can't dream of today. And so while there might be some, just in that moment of transition, there might be some disruption, right, as we work those things out. Without question, it's going to make us a more productive workforce overall.
Well, very, very interesting conversation, David. I think we touched upon a range of issues, and really glad that you could drop by to the studios today.
Yeah, thank you for having me.
Thanks very much, David. Well, that is David Steinbach, Global CIO of Hines. I hope you found that conversation useful. I certainly did. It's a wrap on this edition of the Global Reset. Thank you very much for staying with us. More coming up after a quick break.